now we're going to be screening and bringing to you some thought leaders and experts talking about investments, and we see investments in particular in the fintech world in the GBA and Hong Kong. I would like to start off by asking my esteemed panelists to introduce themselves. We'll start with Ms. Winnie Han.
Hello, Musheer. Good morning.
Good morning, Winnie. Could you just give a quick introduction about yourself to the audience, please?
Sure. Thanks. Hello, everyone. My name is Winnie Han. I'm the head of China Issuer Services and the Senior Vice President of Global Issuer Services in Hong Kong Exchange. My key focus is to lead the China team to promote Hong Kong Exchange as a top listing venue for Greater China companies. I have extensive coverage and works closely with the Chinese government, potential issuers, investors, and associations. So it's my honor to join the panel today. So I look forward to a very fruitful discussion with my fellow panelists. Thank you.
Thank you, Winnie. Danny?
Hi, good morning or good evening, depends on which time zone you are in. This is Danny from Gobi. Gobi is a pan-Asia VC fund. We have been investing in early stage startup for the last 20 years, covering over 300 portfolio companies so far. Myself, I'm covering mostly Greater Bay Area tech startups. Prior to becoming an investor, I'm actually on the other side of the table, working as an early employee joiner for multiple startups based in Singapore and Taiwan and Greater China.
Thank you, Danny. Eric?
Great, thank you. Hello, everyone. My name is Professor Eric Poon. I'm an Executive Vice Chair of Association of Family Offices in Asia. I have 28 years of experience in wealth management, asset management, private equity, and VC across Goldman Sachs Asset Management, BlackRock, JP Morgan in New York, Asia, and Canada. Great to be here. Thank you.
Thank you very much. So we're gonna, without further ado, we're gonna dive into our first question, which is addressed to all three speakers. Looking at talking about tech investments in the region, are we seeing more interest in the area in terms of startups, in terms of fintech, and what kind of companies are getting funded? We'll start with Winnie.
Thanks. So our listing regime of 2018 have fundamentally changed the DNA of Hong Kong capital markets. Hong Kong is now plays a vital role in supporting the capital needs of companies in the new economy and stands as the new economy marketplace of the world. So in the 4 years since our 2018 reforms, information technology, consumer, and healthcare are the top 3 sectors by fundraising and have surpassed more traditional sectors such as financials and utilities. As well as bringing these new economy sectors to the fore, the listing reforms have added diversity, depth, and liquidity to Hong Kong markets by attracting a wide range of specialized and frontier technology providers, including some of the leading players from healthcare and information technology sectors in Greater China. For example, internet platform, e-commerce, cloud services, fintech, semiconductors, precise electronic components, all the very active subsectors in our pipeline and the listed companies. Back to you, Musheer.
Thanks, Winnie. Danny, your views on this?
Yeah, I think it has been a very interesting time. Last year, probably the peak of the investment in the early stage startups or the growth stage startups. Of course, like early this year, in the first 2 quarters, like things have been slowing down a bit in terms of the total volume. But we also see a very interesting trend that like more and more previously focusing in late stage investor, they are now moving also earlier to tap into the early stage startups. I think that's a very great sign that like you now have more diversified financing source, like in terms of startups, like and also you get to know more for longer with your potential next round investor who has the pocket to support you to maybe like in the upcoming late stage round.
Eric, from your perspective, how are you seeing it?
I think it's interesting because if you look at Hong Kong and Singapore, there are getting more and more biotech news, deep tech. I got a family office telling me about how they're going with deep tech. I think he was saying they've grown like 600 times, you know, in terms of the deep tech they're working on. In addition to that, fintech firm, you look at kind of the firm that I'm with, MicroConnect, to 10 to 20,000 families, SMEs in China. So again, these are very interesting in the next, you know, year. Back to you, Ashen.
Sorry, forgot to unmute. Been on Zoom for 3 years and still getting used to it. It's just going to come back to, you know, the following on that conversation. You know, Danny, we mentioned about briefly on Hong Kong and what's happening. How do you see us specifically in terms of the future funding landscape in Greater China and Hong Kong? What are the major trends on the ground at the moment that you're seeing, especially with Gobi? And you know, as a follow-up question would be, what are the kind of investment thesis, ethos, and kind of companies do you look for?
I think like there's very interesting trends happening because of the macro, driven by the macro environment. There's obviously a decoupling of the great powers in the world, like there's tension between US and China, and that lead to a couple of new trends. I feel like domestic substitute by China players has been a major investment thesis for multiple sectors. Like we see this across like semiconductor as well as like medical device. So these continue to play a big role in terms of the VC capital, like into investing into the next generation of local player in China who can be the winner in this like domestic substitute trend. Secondly, I feel like there's also obvious trend for some of the more established player or even new startup based in China, but having the focus from day one, like facing the global market. So we see a true high trend, right? Like companies that may have their R&D team or the founding team based in China, and then like having the end user market like concentrated in other global market, be it Southeast Asia or sometimes even US. Previously, it would be something more on the supply chain advantage, like in this type of like fashion e-commerce cross-border play. But we also see that there's more and more like advanced technology export from China. One of our portfolio company, VLab Group, like they started off in China. They operate as a fintech company, focusing in Hong Kong. Maybe some of you guys use their virtual bank services. But like now they're also expanding their business, investing aggressively in Southeast Asia, particularly in Indonesia, while like a lot of the tech development, the back office, and as well as the risk assessment are actually done maybe outside Indonesia. So this is some trend that we see not just from fintech, but also from other advanced technology like robotic. Like we see Git Plus doing very well with the manufacturing or the technology hub setting up in Greater Bay Area in China, but like exporting all over the world. And in terms of Gobi, like we were still very actively investing across the different technology sectors. Some of the things that we just mentioned now are our key focus. We think that like founders like play a huge role like in the stage of investment that we're looking into. Like at this current moment, I guess like we're also paying extra focus for how agile the company is, like how the founders like see the upcoming trend and how fast can he react to this. I guess it's also another element that we are adding on top, given the volatility of the macro market.
Thanks, Danny. That's quite insightful, because we are seeing that change that's taking place a little bit based on the macro markets, right? Winnie, from a Hong Kong exchange perspective, with Chapter 18A listing rules now in place, what kind of developments are you seeing in the broader market, especially when it comes to fundraising with Hong Kong Exchange?
Okay, thanks. So in 2018, we introduced 3 new listing chapters to attract innovative companies. So namely Chapter 8A for those with weighted voting rights structures, and Chapter 18A for the pre-revenue biotech companies. also Chapter 19C for secondary listings of Chinese companies. So these new chapters have opened the door to a wide range of new economy, including biotech companies with both primary and secondary listing. And more fundamentally, as I have mentioned, the listing reforms have transformed the DNA of our market. And now we are a world-leading global IPO venue for new economy companies, as well as healthcare companies. And the listing stories of tech giants such as Alibaba, NetEase, JD.com have established Hong Kong Exchange as a go-to listing venue for regional tech groups. And for 18A healthcare sector in particular, our healthcare listing have become more diverse. So in 2017, our top 10 healthcare listings were all traditional pharma companies, but now top 10 includes 4 biotech and 2 digital healthcare companies. And we have around 40 biotech and healthcare IPO applications in our pipeline. So we are seeing a lot of encouraging things going on. And the impact of these reforms is hard to to overstate, but here are some numbers. We have 217 new economic companies that have listed in Hong Kong since the new listing rules took effect. And those 217 companies have raised over 870 billion Hong Kong dollars and account for about 65% of the IPO fundraise in Hong Kong during the period. And the new economy companies listed since listing reforms now accounts for 24% of Hong Kong's total market capitalization. So these are all the renovations happening, and we are seeing a more diverse and robust pipeline.
Thank you, Winnie. And it's good to hear of the robust pipeline that's coming through. The exchange has been a leading player in the region and globally when it comes to listings, and we do hope that this continues to be the momentum. Eric, from your perspective, you've been actively looking at the investment landscape, especially when it comes to private equity, to family offices and HNIs. What stage are HNIs and family offices looking at investing in fintech startups? And what stage of development do they look at it? And as a follow-up, do you see a rising trend of HNIs investing in startup companies as an alternative investment strategy?
Yes, absolutely, Musheer. They tend to start maybe with the A round, B round, or some of them getting into a Z round. They call it the friends and family round. That's first point. Second point, they tend to come in as a crowd. So they tend to, if one come in, a couple of them would come in together. So that is a pretty significant thing. To share, for example, the company I'm with called MicroConnect, as founded by Charles Lee, the ex-Hong Kong Stock Exchange CEO. You look at our B round, we done a press release, so these are public info. You got Horizon Venture, you got Sequoia, you also got families such as the Chong's Capital. You had Adrian Chang from New World, K11. So all that you see is definitely sort of the sweet spot of some of the family is kind of the A round, B round. Obviously, in general, they tend to top up in a C round, and some of them kind of go even further. Third point is that they tend to be the anchor at some point as well, because they pre-IPO, they want to anchor it and then go further. So in addition to the family office, I also want to share that the Hong Kong government has allocated billions and billions of US dollars to kickstart the ecosystem via putting money into the Hong Kong Nexus idea. Again, these are public news, and people can definitely sense that in addition to Cyberport and Science Park, in addition to the family office, the ecosystem as generated by the public sector, namely billions and billions of US dollars pumping into the startup stage, are definitely very, very interesting. Thank you, Musheer.
Thank you, Eric. Coming back to Danny, in terms of Hong Kong, we've heard now Winnie speak, you also mentioned earlier about the funding landscape in general, but narrowing it down to the startup fundraising, is it a good place for startups to come and raise funds in Hong Kong, both local and international? startups that are looking to come over? And in your opinion, what's like the biggest difference between Hong Kong and other tech clusters elsewhere in Asia?
Right. I think like is arguably Hong Kong like is a good hub for startup to operate. Not necessarily like you have all the like operation only based in Hong Kong, because maybe you need other regions like support, like in terms of like providing manufacturing talents or as well as like the end user customer base, right? But in terms of fundraising, I think it's definitely one of the top priority hub like you could like choose in Asia. Like we thanks to Winnie's and HKEX, like great work. Like it's no doubt that Hong Kong is definitely a financial hub for late stage fundraising, like for you to go IPO, and also there's lots of family office that we just mentioned, who has a deep pocket, and also moving up to early stage investment. I think there's a growing diversity of financing choices for startups. If we have to compare the Hong Kong versus other tech hubs, say Singapore, right? I believe like the government has been doing lots of great work around the hardware, setting up the incubation program as well as like working space. But in terms of the capital, like Singapore were doing that a bit earlier, like trying to funnel lots of like capital support into startups. Hong Kong has been a bit slow on that front, but definitely like it has been picking up a lot in the last 2 years. Like we see HKMA's initiative as well as the policy address mentioned last year. It has like giving like more than $10 billion. Like we're expecting that going into early stage startups. That's actually a huge amount of funding that currently maybe like in the market is we're talking about like a few times more than before, and I believe like that will give also alternative like source of funding for startups. And what's interesting is like we also see there's like overseas player who or other like Chinese fund that who used to invest more domestically. Now they also shift their attention into looking into the Hong Kong startup as well.
So Dan, just following up on that from a Chinese funds, investments, etc. Again, we asked Eric this question, but from a funds perspective, are you also looking at Series C or Series B and beyond? Or is there also an appetite to come in earlier stage? Because when we look at mainland China, right, and we look at historically the fundraising, you had a lot of the Alibabas and Tencents investing significantly at early stage, but also quite a few startups were getting good angel investment. Are you seeing that extend to Hong Kong, or is it still a little more conservative locally from a Chinese fund perspective, where they're looking at Series B or Series C onwards?
Right. I think like all the capital investors, like they are looking for new growth engine, and both in terms of market as well as the alpha, and going early is one of the way that they now can capture like more alpha, as well as like trying to get the allocation of those successful startups at early stage, right? Now that they can do follow-on investment in the later round. And we also like see that like the overseas like investor or Chinese local investor, they're investing into the startups not just from a financial play. It's also they see the opportunity to bring the technology, because now the as we mentioned about the cross-border play, like there's like a new initiative from sometimes sovereign fund from Middle East. They're trying to invest into early stage startup, trying to bring this technology or the operation also to their local market. And I believe this is happening not just like for Hong Kong startup, but around the globe as well.
Thank you, Danny. Winnie, coming back, in terms of Hong Kong Exchange, what are the plans to continue attracting innovative tech companies to list in Hong Kong? We are looking at an exciting stage where markets are stabilizing. There's macro impact that's coming in from challenges from other parts of the world. But from an exchange perspective, what are the innovations or what are the new things that you're looking to do to attract innovative tech companies, especially in the fintech space, to list in Hong Kong?
Okay, thank you, Musheer. So at Hong Kong Exchange, we are constantly looking to build on the unique foundation of Hong Kong as an IFC to enhance our market attractiveness, improve our processes, and strengthen our diversity, breadth, and the depth of our markets. For example, we introduced the Hong Kong SPAC regime, as mentioned by Eric, in January, and as a potential alternative route to the market. Up to now, we have more than 45 SPAC exchange participants who have already registered, and we have a very strong SPAC pipeline. Ever since the regime come into play, we have received 13 SPAC applications, and up to now, 3 SPACs have successfully listed in Hong Kong. We also enacted reforms to our listing regime for overseas issuers in 2022, expanding our secondary listing regime and providing greater flexibility for companies seeking dual primary listings here in Hong Kong. And these reforms support a whole new generation of international and regional issuers seeking a listing status in Hong Kong. And of course, we will continue to work on a range of new initiatives to ensure that the market and the listing franchise remains highly attractive, well-regulated, and internationally competitive. As many of you may have read or noticed from the news, that we are therefore studying how best to cater for the fundraising needs of large-scale advanced technology companies, which are at an early stage of production commercialization. And we will update the market should there be any new developments of this new listing regime. And we are confident that with this new rules coming into play soon in the future, we will be able to have more technology companies, including fintech companies, to better utilize Hong Kong markets to expand their development. Thank you, Musheer.
Thank you. And if I may just extend that very short, Winnie, in terms of foreign companies coming here, what would be the key attractions that you feel they can leverage off from Hong Kong Exchange as foreign companies outside of, say, Greater China?
Okay, sure. I think Hong Kong is the right international financial center in the right place at the right time to connect this unique China and the global mix. And Hong Kong is actually the most international city in China and also the most Chinese city outside the mainland. And Hong Kong offers global investors and issuers a financial environment that is familiar and trusted, from its legal system to its financial infrastructure, regulatory regime, and tax regime, professional services, and talent pool. Similarly, it offers investors and companies from mainland China proximity, cultural alignment, experience, and critically, international connectivity. So we all know that we have a very unique stock connect system that connects us with the A-share markets. So the investors in the mainland market can invest in the Hong Kong stock, and also vice versa. And investors in Hong Kong, they can invest on A-share listed stocks through the Stock Connect regime. So I think the connectivity of Hong Kong and Hong Kong Exchange is quite unique and will sure benefit any institutions and enterprises that would like to leverage this market.
Thanks very much. We really appreciate that. Eric, coming back to you, right? One of the themes that we are seeing increase is different methods of fundraising that startups are looking at, right? In particular, there is a conversation around revenue-based financing that firms are looking at. Do you feel that is beneficial? Is it detrimental to post-revenue startups? And besides this, as a follow-up, we're also having alternative startup funding models coming up, such as equity crowdfunding. So do you think that will take off in the region? So, but you could probably start off with addressing on revenue-based financing.
Absolutely. Thank you so much. That's a wonderful question. I think the revenue-based financing is a wonderful model, and I'll explain to you why. Reason number one, this revenue-based financing does not dilute the entrepreneur's equity share. Number two, equity-based financing does not usually involve interest, unlike a bond, to the entrepreneur. Thirdly,
true alignment of interests, because the fact that we all try to do better for the entrepreneur and for the company, basically you just pump money in, get it kickstarted, and don't dilute their interests, don't dilute the equity share, and do not charge them interest. So that is much enticing and attractive to the entrepreneur. If it is a fund running this daily revenue financing, it's also good for the LPs, because simply put, you need to connect capital with the entrepreneur. You need a market infrastructure platform to do so. And basically, this daily revenue financing model could scale up. The 3 S's, right? Simple, scalable, and sustainable. So I think it's a very interesting thing. It started in the US a while back, especially in the SaaS type of platform. In Asia and China, it's relatively new because it's not equity, not bond, 非股非债. So it's definitely something that is very innovative. Some of the company, if they don't look to IPO or startup, especially the micro SMEs, this is a perfect way for them to finance kickstart their franchises. You talk about cloud-based sort of equity cloud funding, Musheer. I think that's an interesting thing. Obviously, a lot of way to start me up type of thing is generally a bit smaller, because if you go to cloud funding, it's usually individual who chip in a little bit. And then, so that would be for smaller projects. For projects that are a bit more trendy, those would be good. But for the revenue-based financing, tend to be for scalable projects, bigger franchises, and franchises who got a little bit of track record. And if you do it in a country like China, whereby e-payments are very prominent, that would be another great way, because you can capture the revenue on a daily basis at the payment gateway level. So that's another fintech play, wealth play, because a lot of family offices really like this type of interesting thing, because everybody like day one exit, right? When you get cash back every day, essentially is day one exit. The pain point of PGVC is that people got to wait 3, 5, 7, 9, 10, 20 years. However, and the valuation on the exit is a bit uncertain nowadays, isn't it? But on the daily revenue sharing, you basically get back cash on day one, and your velocity of the cash is amazing because you get the cash back, they could reinvest again. So the IRR would goes up quite quickly. So it's very, very interesting model. I'm learning quite a lot on that, and family offices really like it. It's definitely a great fintech and data play as well. I hope that was interesting.
That definitely was interesting. Just following up, are you seeing more interest in alternative funding models such as equity crowdfunding? Do you think that's going to be quite interesting for HNIs?
Yeah, I think the crowdfunding give a lot of hope for teenagers and youngsters and entrepreneurs who have an interesting concept. It also gives consumers a choice because they got to vote. I think the participation of the consumer definitely would make this type of crowdfunding work in the future. It might not for all projects, because for very big projects, crowdfunding may be a bit more difficult, but it would be a Kickstarter to get the company going.
Got it. Thanks again. Danny, coming back to you almost look towards the end of the panel, but from a closing perspective, even though there's been a lot of money, there's been more money in tech investments than ever before, right? We've seen record funding, especially in 2021, where there were multiples, jumping for quite a few unicorns and others. However, we're seeing that in 2022, the trend has changed with a significant amount of money going into fewer companies, meaning the deals are smaller, even if deal sizes are bigger, and it's getting competitive for startups who are trying to raise. So how would you advise these startups to differentiate themselves to get investments? This basically, as an investor, when you're looking at it, what would attract you or others in your circle or investment circle you think would be attracted by what the startups present to you?
Sure. I think like the reason why we also see like the trend that like you see more and more investment going into Tesla, but like it's also a bit concentrated. One of the factor I believe is also lots of startup are postponing their IPO exit date. So like previously you don't see mega startup who still private, who stay as a private company, right? But now like you do see like more and more established player, they actually remain as a private company until much more later stage in terms of the valuation. So sometimes you see like, okay, the investment amount is huge, but like a bit more concentrated. I get that play one factor, but no doubt that the uncertainty, the volatility of the macro environment also makes investor much more cautious than before. I think they are still deploying like many of the VC and PE, they have raised plenty of like a dry powder in their pocket now, like they will still pick the right player to invest their capital. But at the same time, given the volatility, I believe like early stage investor or particularly growth stage one, like will be much more cautious on the unit economics and your path to profitability. So in the good time, like maybe like more investor will focus on the upside, the top line growth, while like putting the path to profitability as a secondary priority. But now I think it's as equal, if not more important, like how you illustrate that the sustainability of the company, particularly given that there may not be easily next round fundraising coming up within a short time frame. Secondly is like despite that the macro environment is getting volatile, or there's like anticipation of like a prolonged recession, like I think startups, like if you want to differentiate yourself, there's definitely still lots of sector or markets like within some subsector that like are still growing. One obvious example is like clean tech. Like China has been has putting lots of effort from both the government and also the private companies. They are doing a lot in terms of how do you like achieve the carbon neutral in the upcoming decades, and this type of like a field would be something that I believe lots of investors are actually like trying to double down into. And secondly is like even though you're not let's say clean tech play or you're not a player within those subsector, like there's increasing demand or let's say criteria set up by the investor looking into through the ESG lens. So being a startup doesn't mean that like it's not important to look into the governance as well as like the other ESG factors. And I think like it's also something that it all started from LP as well as the VC, and now like the staff should also highlight this. What are they planning or already done in this front? And lastly, like speaking on behalf of early stage investor team, founder is still one key thing that we are looking into and demonstrating the agility and how they see this, like the company is going to evolve through this volatile environment is still something that we pay lots of attention of, like what their plan be if things like didn't work out as planned. I still think like a lot of great companies like nowadays we're seeing becoming a tech giant actually was born in those recession time, and this time we believe it's the same, that it's a good time to pick the winner and doing this like shuffling of the economic interest again, and the team, like how do they stay agile and be more focused on the unit economics and profitability will be one keynote that we want to share with other fellow founders.
Perfect. Look, that's a great answer, and we do hope that we continue to see investments growing in the startup world. There is a reality check in some senses in terms of not just multiples of users, but you also got to show revenue and show a pathway as it were, right? And we're looking at a whole segment, and as Hong Kong is Asia's financial capital, we do look to see that growth in the startup investments as well. Once again, it's been a delight and pleasure to moderate this panel with three of you. Great insights, expert insights. And on behalf of everyone at VFF, I thank you all for joining us today. We are being seen across the world and in particular in mainland China, with over 250,000 views at this stage. So very delighted that that audience could get to hear all of you. So once again, thank you all speakers. To the audience, we will now be switching to our startup showcase, where we'll be showcasing 4 startups, which are Hong Kong headquartered startups across different fintech verticals. So they'll showcase what they're doing and a demo of their product potentially. So stay tuned, and we'll be jumping to that right after this. Thank you very much.